Welcome to my morning report analysis videos on Tuesday 31st of July with me, Japan market analyst at Hantec Markets. We've had the news out from the Bank of Japan overnight, and that's been sort of the main mover on markets today. We've had the BOJ coming out and not really doing a great deal. The market was probably expecting a little bit more. They kept the main 10-year yield target around 0%, and they've sort of suggested they're going to be a bit more flexible on operations, but certainly the reaction on the 10-year JGB yield dropping over 5 basis points has sort of suggested that the market wanted a bit more potentially, or expecting a bit more, and it sort of has reacted in that way. Now, sort of looking at how this is affected on the yen, a little bit of yen weakness, nothing too significant. I mean, considering the dollar is gaining against the euro and sterling, it's just a little bit lower, a little bit of an underperformance on the yen. Nothing too drastic, but certainly there has been a mild reaction. But it'll be interesting to see how this one plays out in the coming days, because it does. I mean, giving the Bank of Japan more flexibility on monetary policy going forward, and allowing the 10-year yield to sort of fluctuate a little bit more around the 0 point. It sort of puts them on the path of normalisation, although it's a very, very small step. But still, it's just a step in the right direction. But it's interesting that the yen hasn't really weakened, although that we are seeing this move on. Where are we looking at on yields lower? That is sort of also been seen on treasury yields, although that move on treasury yields has been sort of unwound a touch, and that's helped dollar yen to move higher today. But interesting moves. Still consolidation really on the dollar and across forex markets generally. No real direction that we're seeing. We've got a load of key data in the coming days. We've got inflation factors today and the Fed tomorrow. So inflation for the Eurozone and the US today will be the key focus. This afternoon we've got the core PCE for the US expected to remain at 2%, but for the Eurozone flash inflation this morning, headline on 2%, core expected to tick mildly higher to 1% from 0.9%. We've also got the consumer confidence at 3 o'clock for the US at 126 expected, so ticking slightly lower from 126.4 that would be. In terms of equity markets, nothing massive in terms of downside, although there was a reaction yesterday on Wall Street lower. There's still these earnings coming through for the majors, or the majors on the tech side certainly are under pressure, and that's helping to drag Wall Street lower. Well, it's slightly stabilised on the futures this morning, but still the S&P 500 down 0.6%, still falling, and needs to find a bit of support. Otherwise, we're going to start to turn back into sort of mini correction territory, I feel. So my chart of the day is Euro Sterling. Now, we've seen the Euro Sterling, or the Sterling generally underperforming, but that is certainly reflected as well on Euro Sterling, which has sort of been pulling higher over the course of the last few months. Just gradual uptrend, but that uptrend is now accelerating higher into a channel. It looks like we're sort of pulling back towards possibly the 89 figure area in due course. Look at the momentum indicators, still pulling higher. You've got the likelihood still is that we're going to get a rate hike from the Bank of England this week, but interesting that the markets are not really sort of pulling for any sterling strength really. We've got this renewed move to the upside as this sort of corrective move has found support, and looks to be pulling higher. We've got a couple of bull candles in a row. Looks like buying into weakness is the way to play Euro Sterling. Near term on the hourly chart, near term breakout above 89 figure, which is sort of pulling higher, and sort of look to use the unwinding moves as a chance to buy. 89 is pretty decent area now. You got that key low at 88.60, and then this sort of run of little higher lows in the last few days. So 89 figure area is probably a decent area to start looking at opportunities again for a retest ultimately of what looks to be this 89 earlier, 0.90 cents figure And yeah, that would be sort of where you're looking at the recent high 89.60 area. So I wish you good luck in your trading today, and I'll speak to you later.